money mindset. It's all about making it, then protecting it, then learning how to grow it. And it's interesting because over the last several years, we've invested in a lot of things: real estate, stock market, digital currency, like all these different things that we've invested in over the years. A lot of that stuff, as we all know, has plummeted. How many of us have a 401k that's now a 101k? How many of us, maybe, our house isn't worth as much right now as it was a year or two ago, right? Inflation, like all this stuff is happening. So, for me, I like to pay attention to what is safe, what you can grow tax-free. So Brandon's an expert. He's going to talk a little bit about that. Brandon's also been in network marketing for years. We've been working together for years. So I trust his, not just his knowledge around this topic, but also as a human being, as a father, as a husband, as a partner. I've been working with him for years. So I understand how his brain thinks, and he's very analytical and knows how to analyze things and explain it in a way that makes sense. So I'm excited for you guys to hear from Brandon. Brandon, what's up, brother? How you doing?
Yeah, what's up, man? What's going on?
Excited to have you on here.
Thanks for that intro. And I feel like, you really laid a good solid foundation for the conversation, and kind of what you talked about, how you and Nadia have come up financially is very similar to Amanda and I. We got started in the network marketing space back in 2013. And our story is kind of a fast story. We started making a lot of money quickly. And prior to getting started in the network marketing space, that was not the case. I was in the military. Amanda was working kind of a mid to lower level full-time corporate desk job. And so we went from not making a whole lot to making more than we knew what to do with. And I'm sure you've probably heard this term, but money is like water. It's going to run somewhere. And all of our money was running to the wrong places. It was running to eating out a lot. It was running to, wasting money on material things that we had no business buying, at the early stages of our financial journey. And, after about 10 years in the network marketing space and accruing millions of dollars in earnings, we finally got to the point where we were like, you know what, maybe we need to kind of rein this in a little bit.
Yeah.
And educate ourselves on what our options are. And in one thing that I don't have is a high risk tolerance when it comes to where we're going to house what we earn. Because I've seen so many people invest in more volatile options and lose everything that they worked so hard to accrue in the first place. And then they're left starting over, right? So I'm attracted to the tortoise beats the hare. I'm attracted to options where you can build a warehouse of wealth that's protected from loss. It can only grow. It can never go backwards. Finances, as much as people like to avoid the conversation, it's one of the most key and critical elements of our life. Yeah. What does Nadia say? I don't know where she got it from, but
money isn't everything, but it ranks up there with oxygen.
Exactly. Yeah. Right. Like nobody wants to talk about it, but everybody's thinking about it. But so that kind of started the journey of, us kind of looking into different options of things that we could do where there was certain growth, where our funds were protected, where they could only grow and never go backwards, where we could access them if we needed to, just things like that. And so I looked into the infinite banking concept, a couple different financial strategies as well. And once I started to uncover this information, I started to really, you talked about how I'm kind of analytical. I think that's the military mindset in me still. I started to do so much research and just started to dig and started to do math in my brain. I've got a numbers brain, just like you do. I started to do math in my brain of, wait, so you're telling me that if I do this, that's what it's gonna look like long term, and I can do these things along the way. And I started to map out this journey in my mind, and I thought two things. I thought, number one, we're implementing these things immediately. Like time now, this is going into place for our family. It's what's the other quote? Best time to plant a tree was 20 years ago. Second best time is today. Well, we were about 20 years too late on implementing this strategy for our family. So I thought we're starting this time now. We're going to overfund so we can play catch up on some things so we can get to where we want to be long term. But then I also thought to myself, man, like the reason why I fell in love, not just was attracted to, I was attracted to network marketing originally because our family needed money.
Yeah.
Like we were in a bad way financially, had a ton of debt, we weren't happy with our careers. So that was what got us into network marketing. But then what I fell in love with about the industry was serving and helping people improve their lives financially. And so when I saw this, I thought to myself immediately, it's going into place for us. And I've got to figure out how I can get licensed professionally to start sharing this with other people and other families as well, because I know so many people, probably 90 to 95% of the people in our kind of inner circle and circle of influence, they might have some kind of a plan in place, but it's not dialed in, and they've got to learn about these strategies. So, we can get into massively complex strategies with this, depending on what people's goals are and, how much they want to multiply their money, how many times they want to get their money working for them outside of their infinite banking policy, all those things. So today's just going to be real surface level. So let's talk about kind of the 16 key characteristics. And here's the thing is the infinite banking concept's been around for literally hundreds of years, like multiple generations. You think about some of the most wealthy families in our country's history. I'm just going to name three: the Rockefellers, the Vanderbilts, and the Disneys. They've been using this strategy, the infinite banking concept, for hundreds of years, right? And so, John, and when I got, of course, anybody who's involved in the network marketing space hears all these quotes that leaders regurgitate over and over and over again, right? And one of the ones that I heard when I first got started in network marketing was, if you want what a successful person has, do what they do, and eventually you'll get what they've got, right? So when I look around, I don't want to follow the financial strategies of the financial struggling. I want to follow the strategies of the financial elite, right? And so, but anyways, we'll get back more into the actual infinite banking of it here in a few minutes. But when you look at, and this will take me about a minute and a half, but when you look at like, what is the pinnacle financial product? Like in game, if you could have everything that you wanted from a place where you put your money, what would those things be? And I believe, and this is actually a book that you can get and read, it's called The And Asset, by one of the top guys, who's really mastered the infinite banking concept, and I'm studying him constantly. But there's 16 characteristics of the ideal financial vehicle. And I'm going to pick the book up and read them from you because I'm not that good at memorizing. But the first is that your money's safe. It's protected, right? You don't want to put your money somewhere. Like sometimes I think for a period of time, and I know some people love electronic currency, Bitcoin, and some of the different things. It freaks me out because you put not only that, but you put your money somewhere and it's like, is my money really there?
That's true.
Is that just a number on the screen? Yeah. So safety is huge. Having your assets being liquid, meaning you have access to them if you want or need them for anything. Growth, of course, everybody's always looking for maximum growth, right? But the funny thing is the people who want maximum growth want minimum risk. Yeah. And those two, they don't directly coincide. It just doesn't work like that, right? So growth, leverage is important. So being able to use your money as collateral. One of the really cool things about the infinite banking concept is if you want to claim the cash value inside your policies on, let's say, a mortgage application, you can. But then it's kind of a dual purpose product because let's say hypothetically you're going and you're applying for financial aid for your kid's college. Well, you don't have to claim it if you don't want to, right? But you can't, and you also have the ability to use it as collateral. So inflation protection, I don't know that any investment right now is keeping up with inflation. But of course, guaranteed growth encourages moving in the direction of inflation protection, right? And if there's a properly structured infinite banking policy, you're going to have that house and a product that's going to give you not speculative market-based growth on your money, but guaranteed growth, predictable certain growth on your money, right? That brings me to number 6, guarantees. Number 7, free of fees. Most people don't know this, but here's the average financial plan for kind of your normal everyday working American. And this is not most people's fault. It's just kind of customary. Most people go to college, take out student loans. It's interest-bearing debt. They go get a job. And then what do they do for a retirement or investment plan? They just go and they start dumping money into a 401k. Well, most people don't realize, number one, a 401k is market-based. If the market does well, great. If the market doesn't do well, then you can actually lose money in a 401k, even with a match. But also, too, generally speaking, in most financial products, if it's managed by a financial advisor, you're paying between 1.5% and 4% fees. And just to do some math on that, that's $1,500 to $4,000 of your money from your accounts per year that's getting siphoned off the top and going to fund the career of the person managing your money. Now, there's nothing wrong with that. That's just how that element of the game works. That's how that industry is run, right? It's called assets under management. People in that traditional financial space, which I am not, they get paid a fee based on assets under management, 1.5% to 4%. So if you got $1 million, then you're paying between $15,000 and $40,000 a year of your funds is going into that financial advisor's income, right? So free of fees, free of regulation, right? Your money's not restricted in any way. Flexible, meaning you can fund it to a higher amount one year and a lower amount next year, right? Having that flexibility. Requires minimal time. Most people want something that's on autopilot. Again, kind of back to the guarantees. They can project where they're going to be in a specific year. Passive cash flow. It's private, meaning your money's not housed in a bank. I don't know if most people don't understand fractional reserve lending, but when we put $1 in a bank, it gets lent out 9 times. Our money is not really in the bank where we think our money is. It's not just like stored in a vault. The bank takes that money and they lend it out 9 times as per IRS regulation on every dollar. And so if you have a large sum of money in the bank, you can't just go down to the local branch and take all of your money out.
Yeah.
Right. And then tax deductible, tax-free growth, and tax-free distribution. Now, most financial vehicles are going to have 5, 6, maybe 7, 8 of those. The infinite banking concept has 15 of the 16. And when I looked at that, when I began to read books like this, and I started realizing how powerful of a vehicle it was and how well-rounded it was a no-brainer to begin to create our own private family bank, leveraging the infinite banking concept. So to the what is it question, because you asked that, can you get into the weeds of what it is? Infinite banking is the concept. So you can't go down to Bank of America and open an infinite banking account, right? You can't do that. So infinite banking is the concept. The vehicle is permanent life insurance.
Yeah.
Now, why permanent life insurance? If you go follow a Dave Ramsey or another financial entertainer, they're going to say whole life insurance is the devil. Well, they're partially right, partially wrong. The type of whole life insurance that is used, the type of policy that is used for the infinite banking concept is not what they're talking about. Right. And so when you look at whole life insurance, why whole life insurance? Well, there's only a couple legal ways that we can legally grow our money tax-free inside the United States of America. One of them is some real estate transactions. A Roth IRA is a phenomenal option. But when we look at a Roth IRA, there's a lot of limitations. The government doesn't want us being able to grow unlimited amounts of money tax-free. So a Roth IRA has a maximum amount that we can fund it with per year. The challenge with a Roth is you can't access those funds until you're 59 and a half without major penalty. So that's a Roth. And there's a couple other options as well. But when you look at why whole life insurance for the infinite banking concept, it's because it's one of the only legal vehicles one of the only legal chassis that we can build a policy on like this to grow your money tax-free and also to pass it on generationally, lump sum tax-free as well. So what is it? It is properly structured. That is key and critical. So it's properly structured, overfunded, high cash value, whole life insurance. Now we could get into a conversation about index universal life, IUL, and whole life. I prefer whole life because there's guarantees. I do not prefer IUL because there's no guarantees. The indexes don't do well, your money doesn't grow. And if the indexes all don't do well and you're paying the fees on an IUL, you can actually lose money in an IUL. So I prefer whole life because it's fee-free and there's certain guaranteed growth, right? So again, properly structured, overfunded, high cash value, whole life insurance. Again, whole life insurance because it's tax-free. So what happens is when I'm working with a client or when we're sitting down and we're having an initial conversation of, well, how much do we put into it? Right? What does the custom plan look like? Because like you said, everything is individualized. Everything is fully customized. And by the way, this is something for hundreds of years, like I mentioned before, that's been leveraged by the financial elite. I have clients that I'm helping create starter policies, starter infinite banking policies with very little, but they're starting something now. So this is available to every person at every financial level. That's important to know. Right? You don't have to be a John and Nadia making millions of dollars a year. This is something that is now leveraged by the average American family. And in my opinion, it's something that should be leveraged by the average American family to begin growing your money tax-free. So when we start making our premium payments into our infinite banking policy, it's an insurance product. Part of your premium payment in the early years is going to go towards the death benefit because it's a life insurance product. Part of it is going to go into what's called the cash value accumulation. Now let's get back to properly structured because this is incredibly important. I'm helping people all the time get out of old bad policies. They went and sat down with the guy at the State Farm agency down the street and he put their money in something that he called high cash value and they're 5 years in and they still don't have a dollar, right? This is not that. So what we do when we're custom engineering an infinite banking policy for a client is we pull the focus all the way down to the lowest legal threshold on the death benefit. And we push the focus all the way up to the highest legal threshold on the cash value accumulation. So that when we're making our monthly or annual premium payments into the policy, majority goes to the cash value, minority goes to the death benefit. And so here's what happens. Over time, your cash value gets to the point where you have way more in your cash value bucket than you've ever put in premium payments. And we'll get to the growth in a second. And essentially at that point, your death benefit is free. And most people think about a death benefit as unnecessary. But here's the thing. Are we worried about legacy? Are we worried about transfer of wealth? There is no smarter way to transfer wealth from one generation to the next than through a life insurance product. And the reason why is because when my infinite banking policies that I'm going to use to my advantage for my whole entire life, I'm going to leverage the cash value for some things that we'll talk about here in a few minutes. When I'm going to use that for my whole entire life, whenever I pass, whenever that is, and none of us know when that time's going to be, right? We never know when the last day is going to be. Everything inside that, in the death benefit of that policy gets transferred to my kids or Amanda, if she's still alive, lump sum, tax-free. Mm. And that's why, you know, the ultra wealthy and the financial elite have used this strategy for so long. Right. Not only do you have the ability to grow your money tax-free while you're alive and access it and leverage it and use it and build a tax-free retirement and all those things, but you also have the ability to pass on essentially that financial portfolio or your net worth lump sum tax-free to the beneficiaries, the next generation.
You know, you work so hard for your money. There's nothing more frustrating than working really hard for this lump sum of money, and you put it into something that's supposed to be safe and have these great returns. Yeah. And come to find out it was mismanaged or mishandled or you're misled, and you end up losing $100,000 or $10,000 or $5,000, whatever it is, or you have a 401k that you thought was growing over time, but really most of the money that was made is going to fees and all these other things that accumulates over time. I mean, this is part of what, you know, we went to the Tony Robbins event for all those years ago because, you know, we wanted to get like really structured and organized with our finances and make sure we're learning from the best people, because there are a lot of really smart people that have very strong opinions with the best places to put your money and, you know, investing and all the things. And I love this quote by Danny Johnson I heard years ago. She said, there are really smart people that spend all their time, all day, every day, trying to figure out how to get your dumb money, right? We've all been there. And the key to success, once you start making money, is diversification, right? And this is one of those things that we diversified into, and we actually set it up years ago, you know, with the IUL. And I agree with you. I think the infinite banking concept makes more sense, and it's probably why it's more popular and people hear about it, but they don't really understand what it is. So it's and they're also talking to someone that's maybe a little bit of a novice when it comes to this, and they don't structure it properly, which is a big part of it. So
I think one of the biggest challenges with the infinite banking concept is people try to overhype it, overinflate it, you know, and a lot of times people are just, you know, really good marketers, because you can make a lot of money marketing anything, right? They're really good marketers, but really they don't have the client's best interest at heart. So just be careful where you're getting your information from, and be careful who you're working with. But back to what you were saying, and kind of going back to the infinite banking concept in general, with just a little bit more depth. So here's what starts to happen. In the beginning, we can think about our infinite banking account or our infinite banking policy as kind of a savings account on steroids. It's like systematic savings, We're building up that cash value. We do have the ability, if we want to, if we've got a lump sum, whether it's from a windfall or savings or whatever, we can go ahead and front load the policy with what's called an initial premium to get more cash value in there, growing faster, right? But we're going to start to generate this cash value, systematic savings in the beginning. And the cash value inside our policy is generally going to grow somewhere between 4 to 6% tax-free. Now, I don't know if you've ever studied historical returns in the stock market, John, but from 2020 to 2022, if you take all of those historical returns into account and you add a minimal 1.5% management fee, which most people are paying more than that, you only have to be at 4.6% to beat the market over that 22-year time span. So if you can grow between 4 and 6%, you're keeping up with or beating the market in a lot of cases based on that specific time frame, which most of us on here, if we've got money in the market, that's a time frame we can relate to. So the money's growing at 4 to 6% tax-free inside of our policy. And as our cash value accumulates, in the beginning, it starts out as a savings account on steroids, right? We've got access to the cash value the whole time. I'll talk about that here in just a second. But once our cash value has accumulated to a certain point, whatever we decide that point is going to be, we're going to begin to leverage the cash value. This is the infinite banking concept to it all. We're going to begin to leverage that cash value for opportunities, for cash flow opportunities outside of the policy. Right. So here's what's cool. So let's say hypothetically, my cash value, let's say I'm just doing, kind of an average or a minimal monthly premium. Maybe I did a small initial premium on the front end. And let's say a couple years in, I've got $50,000 in cash value. Let's just use that as a square number, right? Again, it's going to be different for everybody, but let's just use that as an easy square number. Well, let's say that right now, what's a car loan at right now? Like 13%, 10%, something like that. But when you look at that, right? So I've got $50,000 in cash value in my policy. Well, now I can take back the banking function in my life, and I have the ability to access that cash value two ways. I can take it out as a withdrawal, which I don't recommend doing, because if you take it out as a withdrawal, it's no longer gaining that 4 to 6% uninterrupted, tax-free compounding interest every year. The second way is we can access it through a no questions asked policy loan. And what I mean by that is we call the carrier or we fill out a piece of paperwork. All it says is how much of your money you want, when you want it, and where you want it sent. There is no underwriting, there is no anything, and you take it as a policy loan. The preferred carrier that I like to use right now for infinite banking policies, it's a guaranteed 4% interest rate. So I take that policy loan against my cash value. I go spend that money on the car. So I'm guaranteeing myself a lower interest rate, which is great. I'm saving myself an interest. Right? But here's what's cool. I've purchased the car. I now own the car outright. That money is still inside the policy, growing at 4 to 6% uninterrupted compounding tax-free growth. And I'm in charge of the payback provisions. I don't have to go based on what the car dealership tells me my structure is going to look like, this much per month for this long at this interest rate, paid back by this date. I can put it back however I want to include never. And if I never pay it back, then that outstanding loan just comes out of the death benefit whenever I pass away, right? So ultimate flexibility there with that. So that's an example of taking back the banking function in your life. I'm not going to the lender anymore. I'm now my lender. Once the cash value continues to grow more and more, you could do the same thing with a home, with a mortgage, right? There's people who will sell one home, do a massive, front-loaded initial premium with a monthly premium as well. They'll immediately borrow out the amount of money that they need to go purchase another home in cash. Now, here's one thing that I didn't mention. You take that policy loan at a guaranteed 4% interest rate, but remember, the money is still inside the policy growing at 4 to 6%. So it creates what's called interest arbitrage. It nullifies the interest. You take it at 4, but it's still in there growing at 4 to 6. Right? So it creates interest arbitrage, nullifies the interest. And as you pay yourself back, all of your money goes back to you instead of your money going back to a lender who's charging you principal and interest. If we want this concept to work, we want to be an honest banker. We want to pay ourselves back like we would pay somebody else back. But the difference is you're just taking money out of one account and putting it into another account because you have access to it. You're just paying yourself back, right? But this can be really powerful when you get your money working for you once inside the policy. But then again, outside the policy,
Right.
right?
And compound interest over time. I mean, that's,
Right.
yeah.
Yeah. Uninterrupted compounding interest. That's the ticket, right? That's the infinite banking of it. And then long-term, here's what's awesome. So we've talked about systematic savings account on steroids. Phase 2 is it turns into an opportunity fund. We have the money working for us once inside the policy, growing at 4 to 6% tax-free. And then we can take some of that if we want to. You don't have to take some of that and invest it into some cash flow producing assets. Use the cash flow to pay back the policy loans. So this is just a warehouse for your wealth over here, right? Uninterrupted compounding tax-free growth. But long-term, what's cool is people who begin to leverage, the infinite banking concept, and they have it in place over time. It's one of those things where the longer it's in place, the better it gets because of the compounding growth on your money, right? So I just worked with a client, for example, we're putting in X amount of dollars. I'm not going to use the actual numbers, but we're putting in X amount of dollars over a certain period of time, and it's going to turn into 10 or 11X that amount tax-free that they can access in their retirement years.
Right.
And that's powerful. And how it's tax-free in retirement is once we get to retirement, we can take withdrawals from the cash value up to the cost basis, up to the amount we put in. And then everything beyond that, we take out on a policy loan that we never intend to pay back.
Yeah, I remember that there was a book called Tax-Free Retirement. That was like the book that was recommended to us all those years ago.
Yeah.
And that was the concept that blew my mind, because most of us would probably agree that long-term retirement doesn't look so promising if you're relying on pension or Social Security or 401k, whatever that looks like, right?
Yeah.
Maybe you have a network marketing business, but awesome. You're not just making money. Making money is cool, but you got to protect it and grow it. That's the key to success. And I just don't see a lot of places you can do that right now because of what's going on in the market. So this is one of those things that I think is worth looking into. And, whether you have a financial person that you can go to for this, or you can reach out to Brandon, you need to understand it and see if it makes sense for you, even if it's a smaller amount, like you said, starting out. Like, it just makes sense to have something like this in place, because so many people, they have no retirement plan. They have no financial literacy. They have maybe a financial advisor, but Tony talks about that a lot in his book about you just shouldn't have one. It's just, you don't want that, because the fees end up accumulating so much over time, and it really cuts into what your profits could look like. And anyway, so all that stuff is just, it's just financial education. And if you don't have financial education, you're going to end up in a situation where, you're going to get taken advantage of. Like I said, there's a lot of smart people that spend all their time trying to get your dumb money. So it makes sense to find someone that has a plan in place that you can trust